Hello everyone, this is Matthew Fraley, founder of BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading algorithms like our 21 SPY and ES mean reversion systems, our amazing KISS trend following systems. Been doing this since 2003 for individual traders and professional institutions. And last week we just closed out some nice trades on one of the mean reversion systems, the SPY RSI oversold system. You can see the nice trade there on both SPY and ES. And also our KISS trend systems went long on the indexes last week. Here's the Qs, went long basically there on Tuesday. Pretty great entry. It's had a good year as well. Anyway, enough about that. Let's go ahead and get back to this newsletter. This is a very comprehensive weekend newsletter. It's Sunday, November 5th, 2023. If you're new to the YouTube channel or Breakpoint Trades, these weekend newsletters tend to be very comprehensive. This newsletter has about 100 charts. Will probably take, close to 40 to 50 minutes to complete. So these aren't meant for those of you with TikTok attention spans. This is meant for people who love trading, love technical analysis, like to learn, really get into this stuff. Okay, so this is our backend recorder for our website. Besides the YouTube videos, we have standard web page newsletter, and that's what I'm going to start recording here right now. Hello everyone, this is Matthew Fraley with BreakpointTrades.com. First off, I hope everyone has enjoyed their weekend. It's Sunday afternoon, 4:50 Eastern Standard Time. Market futures open in about an hour and 10 minutes. This, of course, is the weekend newsletter for November 5th, 2023. Like I said, hope everyone had a nice weekend. Okay, as far as this newsletter, I got about 100 charts here tonight. Going to discuss a lot of things. So, please stay tuned and listen. Again, got a lot to discuss. So the newsletter here divided into 6 major sections. General formatting, as I usually keep. I'm going to discuss one of the mean reversion systems, which closed out a beautiful long trade last week. Then we'll move on to the general market analysis. We'll look at some custom indicators, systems. We'll do a sector overview. We'll look at the dollar, commodities, precious metals, GDX. We're also going to look at some individual names in the precious metals sector. Also on the sectors, I added a couple things like emerging markets and a couple Chinese names. That area is moving. Obviously, we're going to talk heavily about bonds and interest rates, the 10-year Treasury yield. And of course, I'm going to do just a recap on trade ideas. I didn't add any new long ideas because, let's face it, guys, the market had a gargantuan rally last week. It was up every single day, 5 days in a row. And what's more, 4 of those gapped up. So we had 4 gaps last week. That's impressive, right? The S&P gained 5.85%. The NASDAQ gained 6.6%. Dow gained 5.1%. And the Russell 2000 small caps gained 7.6%. They've been the most oversold. So hell of a rally. Also, huge gains across the 21 market sectors we follow. Every single one of them were up, and a couple were up double digits, such as home builders and banks, up 12.8 and 11.1% respectively. US dollar lost 1.2%, which is a big pullback. Also, the 10-year Treasury yield had a big pullback, lost 5.9% for the week. Remember, we've been showing that in a parabolic uptrend. It had basically hit one of my long-term targets, and the pullback in the dollar, the pullback in the 10-year obviously helped the market. But really, guys, again, coming into last week, into Monday, the market came off an extremely oversold condition along with high bearish sentiment. CTAs needed to reposition. QRA from Fed Yellen, which I'll talk about a little bit below. But, that caused, that everything was set up for a rally, and that led the spark for a huge rally. We also got a confirmed breadth thrust move. Okay. Again, let me clear this up. This rally has nothing to do with great earnings, guys. It's all about liquidity and positioning, ODT options, everything else, everyone's a trader these days. And below here, I'm not going to go into this. We posted this on our trading community blog. I suggest you go read that. If you're a subscriber, you can also pause the video here. on YouTube. I'm going to put this in the description as well, but this here talks about really Janet Yellen set this off with their with what they did with the QRA, basically kicking the can down the road. Again, make sure to read all this. I'm not going to go into that here. And got various links here for you to read, etc. Anyway, good week for the market, great week for the systems, and let's go ahead and keep moving. First image below, item number 2. So one of the mean reversion systems went long last week on Monday. That was the RSI oversold system. Pretty self-explanatory. It's based on the RSI getting oversold. There's obviously other conditions in there. And it caught a very nice mean reversion trade, as you can see. It caught it on both SPY and ES futures. These were sent out as trade notifications to our subscribers. And here you can see the gains from last week. Nice gains here. And so, again, congrats anyone who did the systems. Next, let's go ahead and move back to the market analysis. So item number 3 shows the index sector table, what transpired last week. Again, look at these gains for the weekly gains here. Major indexes, which I already discussed. Massive gains, again, up every day. And 4 gaps last week. I will say, guys, 4 gaps and no pullback, no consolidation. The problem is that also doesn't form any support areas. So if the market wanted to, had some bad news and wanted to sell off, there's not a lot of support below. You have little support on such, just a straight up move. Anyway, nice gains. Nice gains for the sectors here, the 21 sectors we follow. Obviously, home builders bouncing back strongly, especially with that pullback in rates. Banks up strongly. Again, everything was up strongly. US dollar down 1.2%, which is a big move. Obviously, all the other currencies rallied. Cryptocurrencies, Bitcoin, as you know, had the big rally over the last couple weeks. So last week it was basically chopping around. To me, that looks a bit overdone. Looks like it needs some consolidation. And as far as commodities here, the DBC, that's the index, was down 1.3%. A lot of that was due with crude oil. It's heavily weighted to the commodity index, down 5.9% for the week. Gasoline down 4.1%. Natural gas up about 0.9%, copper up about 1%, agriculture up 1.6%, coffee, etc. Precious metals, gold, because it's had a heck of a rally, finally pulling back for the week a little bit, down about 0.75%. And GDX, though, the miners, they were up about 0.9% for the week, as you can see. And as far as bonds, like I stated, big pullback in the 10-year, 30-year, which obviously the market liked, and nice rally in the bonds. Next, item number 4 shows the economic news calendar. Not a lot of news on the docket here this week, and last week we had a ton of news. And we got a lot of earnings out of the way, such as Apple and most of those FANG, big cap tech stocks. Obviously, there's companies still reporting. But guys, let's go and jump to the charts here. So first chart, item number 5. Here's the McClellan oscillator for the NYSE index. So this was discussed in last weekend's newsletter. Again, we were very oversold in the market. As you know, we had bearish sentiment out the wazoo, and we had a positive divergence on these McClellan oscillators. Now, that may or may not mean anything to you, but in our observation, a lot of the really good lows in the market are made when you have a divergence. You can see the little divergence here, little higher low on the McClellan versus a lower low on the S&P or Dow, and so that led to a big rally. Now you can see how quickly that McClellan oscillator moved up outside its Bollinger Bands 2 days in a row. So quite overbought here in the very short term. Again, we've had 5 days up in a row, likely due for a consolidation. Chart 6, here's the percentage of stocks in the S&P that are above their 20-day moving average. Now, I forgot to add the line here, but you can see this was quite oversold. It was down around 12%. But you also had a positive divergence here. And what I mean by that is you had let me just draw it in there. You had a higher low on the percentage of stocks in the S&P above 20-day moving average, and you had a lower low on the S&P. So that was yet another confirming thing. Again, so many things lined up last week to ignite that spark and, launch that market rally. Finally, chart number 7, here's the NYSE index with the breadth thrust. So the breadth thrust is the NY advanced decline versus NY total. And the definition is right here. So the breadth thrust made by Martin Zweig. Anyway, so you basically need to move from 40% to above 61.5% within 9 days. And we've seen some moves like this before in the recent past over the last couple of years. But a lot of times when this works from oversold to overbought, a lot of times it's been more than 9 days. But look at this. Last week, within 5 days, this went from an oversold condition. By the way, you had a positive divergence there, you can see, and all the way up to the overbought. So instead of 9 days, it took only 5 days. These breadth thrust indicator signals don't occur often, so you can see that. Next, let's go ahead and move back to the index analysis. So starting with the bigger picture chart, here's chart number 8, the monthly view of the 5 key major indexes. So far for November, we're up nicely. Remember, at the end of July, Steve and I were looking for a correction in the market from August, September, maybe and into October, and we got that. We were down 3 months in a row, and so far now we're rallying and potentially end of year Santa rally. But next, chart number 9. Here's the weekly view of the 5 major index. Again, look at these candles. These are some of the biggest 1 week candles you'll see. Again, we were quite oversold below lower Bollinger Bands on these indexes. Solid move here. Essentially, you could see on the NASDAQ testing this channel and close on the S&P. Next, chart number 10. Here's the daily view. Again, same type of chart with the Bollinger Bands, the indexes. You can see how we are trading below those lower Bollinger Bands on all these indexes, and we've had a big snapback rally up. That's what happens on these markets. They get too stretched one way and they have a violent move the other. And guys, I've been doing this for 20 almost 25 years now, and the markets are definitely different than they were in the past. The markets, to me, the moves are much more violent up and down than they used to be. Next, let's focus on the S&P 500 chart. So here's chart number 11, the daily view of the S&P. So this shows this couple different things: leading diagonal, WXY, XZ pattern. We had 5 waves down. Again, you had an overlap here. Wave 5 overlapped the high of wave 1. That's why it's not a traditional 5 wave. That's why it's some sort of leading diagonal or this WXYZ pattern. Okay, so Elliott wave, just little educational. Otherwise, from the March low, you can see we bounced right from that 61.8 fib. That's always an important area. We went up 5 days in a row last week. We have 4 gaps in here. We're now above this trend line. So if we get a pullback, watch to see this broken trend line act as support. But I don't think the market's going to just run straight up here. It needs at least some sort of rest. Next, chart number 12. Here's another daily view. Shows the larger channels. So again, we've had a heck of a move up. Here's a couple options. One option is for a little, and this is one we kind of favor at the moment, a little pullback here, and then yet another move up, which could top out at this larger potential channel. So this would be sort of like a little mini wave 3, then a 4, then a 5, then a pullback, then a little deeper pullback, but a higher low. Maybe we fill one of these gaps, a couple of these gaps, and then rally up again. The other view, once you get this move up, that could complete the pattern and you go down again. But again, we got a breadth thrust, so I'll give the benefit of the blue for now, but this is what we're watching for observations. Now, some of you may be new here and you're saying, well, all right, you're giving us a couple options. Well, how is that useful? It's useful because trading, guys, is not knowing exactly what's going to happen. It's making a plan and looking at areas that are important on a chart where you can take low risk trades off of. Okay, you got a low risk long down here. You could have a very tight stop at the low. And here on if you get a little pullback to this line, you may be to take a tight, a long with a tight stop. You get up to here, you maybe could probably take a short with a tight stop, right? So that's what trading is, guys. It's not knowing exactly what's going to happen. It's setting up a couple scenarios that look plausible, and then finding areas that are important on the chart, and then doing trades around those areas. Okay. Next, moving on to the KISS system. So chart number 13, here's the daily KISS system. Now this is the improved daily KISS S&P. And you can see the long trade. Now this improved version, it would have got out a little bit later in August instead of early October. However, it had a nice entry last week on Tuesday, as you can see. And the stop essentially goes at the low. The reason why the KISS systems are great is because that's the thing, guys. These KISS systems are long. It doesn't matter what the market does. If the market rallies to new all-time highs, the KISS systems will catch it. If the market, gets up, has another rally further and then pukes again, well, the KISS systems will be protected with their stops and get you out. So the KISS systems are kind of like, it doesn't really matter what's going to happen. They're going to catch it. That's the nice thing about them. You don't have to know what's going to happen. Next, image number 14. Here's the statistics to that S&P high probability daily KISS system. And here's the S&P buy and hold. Okay. So again, where the KISS systems shine is the very small drawdown. They're able to catch or capture at least the gains of buy and hold or higher. In this case, it makes more than buy and hold, as you can see. But your drawdowns, your average drawdown, 1.5% versus 15% for the S&P, with a max drawdown of 40, almost 50% there. Max drawdown was only 5.9%. So you're looking at, a seventh or 1/10 of the drawdown. And drawdowns are what makes you emotional. Number of trades, even though this is a daily chart, you're only looking at, average of about 3 trades a year. If you can't do 3 trades a year, then you have to re-examine your life, guys. Even if you play golf all the time, you can still do that. But you can see this is up 16.5% this year versus 11 for the S&P. It made about 1.8% last year versus the S&P, which lost 18%. So, and here's 2008. It made 4.5%, which wasn't much. Again, remember, KISS system is long only, so it's only playing one side of the market. But the S&P lost 38% that year. Quite the difference. Next, image number 15. Here's the 4 time frames we like to follow with the moving averages and cycle indicators to mark. So also into Monday of last week or Friday, remember we were very oversold. We had a DeMark 9. We had a support cycle. And look at the ribbon. Remember, I always say these ribbons are very powerful because when they get too wide, you look for a snapback mean reversion, and that's what we got, right? Just like when they pinch, you can also get a strong move in the market. So we had that wide ribbons. Short term, we're a little overbought here. You can see the DeMark 9 on a half-day chart, DeMark 13 on a 130-minute. So, at minimum, I'd look for at least a little consolidation here. Also, guys, notice these are the resistance cycles. The cyan ones, or the purple, magenta. Whenever you break through those, that actually signals a breakout. Okay. Remember, the support cycles are the cyan dots. Next. Chart number 16, here's a half-day chart of the S&P. Again, first you could look at the moving average ribbons. Again, you can see how wide they were at these last couple lows. See how powerful that is. You can see we broke through this little leading diagonal type thing. If we get a pullback, maybe we find support on this broken trend line, then move up again. Next, chart number 17. Here's a 60-minute chart showing some of these gaps. Here's a demand or supply zone. So we're right up at this supply zone. Could be a little area to pull back from. You can see some of the gaps below. Next, chart 18, here's a 30-minute chart from last weekend. We were talking about the 2050 MA here, and that was a nice trigger as well. Again, I don't like moving average crosses for systems, guys. They tend to be very whippy, just like here. But that was a good signal coming off an oversold condition. Okay. Next, chart 19, here's another 30-minute chart. And here I drew an uptrend line from here. It appears this is some sort of wave 3 of some sort. So, eventual consolidation may also come down to this trend line, which could be an area to, look to position more longs if you're not long enough at the moment. Chart 20, here's a 15-minute chart. And again, guys, nice clean channel, but look at all these gaps. Gap, 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 gap. Like I said, 4 freaking gaps in a row last week. I don't remember ever seeing that, actually. But again, you can see how quite oversold we were. We had a falling wedge going into Friday's close, positive divergence on the MACD. We gapped up, so that was like a power gap. By the way, whenever you gap over a resistance trend line out of a pattern, that is typically a breakaway gap if it's on larger volume, which it was. So we formed a gap there, and these gaps all the rest of the week. Here I drew a steep channel to watch. Next, chart 21, here's a 10-minute chart that Steve drew. Again, shows you the same channel and shows you these open gaps. These gaps eventually do get filled, but again, under a more bullish case, we're not going to fill these lower gaps for a long time, but a couple of these upper gaps could get filled. Next, chart 22, here's a 15-minute chart. Remember, I discussed this last Monday. I discussed this as an educational example, this bullish break in structure where you take out a previous lower high. You can see all the lower highs in place here. So we took that out. That was bullish, and you can see that started an uptrend. Now, as far as wave counts, and again, guys, don't hold us to these wave counts because this stuff can change. If you've studied some Elliott wave before, you know that there's always variations in counts. It's a very difficult, and you can get bogged down in it. So we try not to do that, but again, this does appear to be some sort of wave 3 up here. Maybe we get a 4 pullback and then another move up and a 5. And that kind of corresponds with that daily chart I showed you above, if you recall. Next, moving on to the triple Qs. Here's the triple Qs. Again, they didn't quite tag its 200-day moving average. I wish it had, but again, strong rally up. Now it's approaching the downtrend channel, which is resistance. Next, chart 24, here's a weekly view. Now this shows you the very bullish count where we go to new highs. So this would be a nested 1, 2, 1, 2, be 1, 2, 1, 2, 3, A, B, C, 4, and then you go up, make a new high as a 5, a 3. So something to think about. Next, chart 25, here's a half-day chart of the Qs. Again, the same as that daily. We've rallied from the bottom of that channel. We did not fill that gap below, and we're now at the top of the channel, which, again, could we break through here? Yes. But really, for the market, it would be better to have some sort of pullback in here and then maybe break out of it. Next, chart 26, here's a 60-minute view of the Qs. Again, just look at this straight up move that we've had. Moving average ribbon is getting a little wide here. Not surprising. And chart 27, here's a 15-minute view. Again, just moving up, some sort of wave 3. MACD divergence here starting to form, as you can see on this move. So again, probably due for some sort of pullback here in the very short term. Next, let's move to the KISS systems. Chart 28, daily KISS trend system for the Qs. And you can see how it's done this year. Nice long from January to February. It was flat for a couple weeks, went long again, was long into early August, got flat again, had a whipsaw trade there in September, then it went long last week on Tuesday. Excellent entry. It still has a stop there at the low, and apologize that stop price is being cut off by the access price, but again, it's essentially the low of this candle. And hopefully this week we'll see the stop start to move up. Next, Chapter 29, here's the 4 time frames. Like I said, similar to the S&P. So, the Qs had a DeMarca 9, support cycle, very wide moving average ribbon on a daily, just like on the S&P. Okay. We have a DeMarca 9 on a half day, just like the S&P. And so the ATR on all these lower time frames are now support. Next, chart 30, here's Apple. Apple net did not break out of this pattern. It had earnings last week. It mostly recovered from that, but not the typical Apple move, as you know. So obviously, you got to keep an eye on Apple and these big FANG stocks going forward. Next, moving on to the small caps, chart number 31, IWM. Again, this has been the weakest index of the year, very representative of the market which has been extremely narrow breadth, led by 7 to 10 stocks, never healthy. And the IWM doesn't contain those. And so this is more representative of the average stock in the stock market. All right. Head and shoulder pattern back there in August, played out. Anyway, it bounced off this demand zone, the support going back to July and October of 2022. Nice rally. In fact, we gapped over this little broken trend line, stalling near the declining 50-day moving average. So logical area to now pull back a little bit from. Next, chart number 32, here's the 2-hour view. Again, strong move up. Here I added some fibs if we pull back right from here. And there you go on the indexes, guys. Heck of a week. Let's look at some of the indicators. Chart number 33, here's the VIX. So the VIX, as you could imagine, has been melting down, but it is near its lower Bollinger Bands now. Again, an area where it may find some support. Try to bounce from, which would, like I said, correspond with a pullback in the market. And as far as the VBIX, kind of curious. Now, that did not get below its lower Bollinger Band. So next, chart number 34, here's the S&P McClellan oscillator. Remember, I already discussed these above. These McClellan oscillators coming into Monday had this, coming into Monday or the previous Friday, had a strong positive divergence. And that typically produces a nice low, and we've rallied from that. Chart number 35, here's the NYSI 9 EMA crossover system. And this also went long last week. Remember when it had this and we filtered that out with that confirmation filter, I said the next one should be a good buy signal, and it was, or potentially is. This has been a pretty good system, guys, and this is another reason why to be a subscriber of Breakpoint Trades, not just viewing YouTube videos, because as a subscriber, you get all the chart links to these custom indicators that you can save on your own computer and check them anytime instead of just looking at these static images. Chart number 36, here's the S&P 500. This is a 60-minute chart compared to the high-yield corporate. And here's another big thing that was really standing out to me. You had a lower low on the S&P, higher low on high-yield corporate. That gave you a clue of the market rally. Remember, the market follows high-yield corporate. They're two highly correlated. So whenever the divergences occur is when you typically get reversals, and that was a big one. Chart number 37, here's the weekly view of S&P versus high-yield corporate. Like I said, the two tend to move lockstep with each other. Just take a look at the weekly chart. Most of the time, they move together. When they diverge, like you see back here, 2022, that was the July time frame before that big sell-off. That was warning you. And the high-yield corporate's been stronger here lately than the S&P, so that was a positive. Chart number 38, here's the daily high-yield corporate, basically back to the highs. Next, let's move to the 10-year Treasury yield, TNX, down almost 6% for the week, pulling back off that 5% level. Remember on this, you got to divide by 10 to get the percentage. Next, chart number 40, here's the daily. Again, nice pullback. Remember this parabolic move I said, those aren't sustainable. We had MACD and RSI divergence there. And finally, this played out selling off, and that's helped the market. Next, chart number 41, TLT 20-year bonds. Remember, they move opposite of rates. So logically, you had the inverse pattern and gapped up out of it. Next, Chart 42, here's TLT monthly. Remember, I've been talking about this 5-wave decline. You have, for the last 3 years, TLT has been declining. You had a clear, and this is a traditional 5-wave pattern. 1, 2, 3, 4, doesn't overlap. 5, and you had MACD divergence, RSI divergence. You could see the waves in the moving average ribbon as well. But this is a big demand zone, and I stated if this forms this confirmed 5th wave low here, because it's been downtrending for 3 years, I would at least expect a counter trend rally, right, to last maybe a year. That would give the market maybe time to rally for a year potentially. We'll see. A lot can happen, but it's just something to consider, guys. TLT is in a secular bear market now, but it's not going to bear markets. Secular bear markets, you don't move in one direction all the way. You have counter trend rallies. Let's move that. All right, let's move on. Chart 42, 3. Here's another monthly chart. This illustrates what I'm talking about. So 5 waves down. If this is the 5th wave low, I would expect maybe at least a year ABC rally, lower high, but that would allow rates to pull back, a couple percentage points at least. That would maybe take some pressure off quite a lot of stuff. Finally, chart 44, here's the yield curve. So look at this once in a while. As you know, this has been inverted forever since early 2022. It has come back a lot. Remember, we had that divergence, positive divergence building. This is important, though, because a lot of times whenever this is inverted, you don't get your recessions until this goes back positive, right? So once this really goes back positive, that's where we might finally actually see that recession. Next, chart 45, here's TMF. That's the triple long ETF for TLT 20-year bonds. I should have had that up with TLT, but I gave this as a long idea a week ago, and it's produced a very nice percentage move out of that. Hope some of you caught it. All right, guys, let's go ahead and look at some of the market sectors. Again, everything was up last week, so I'm not going to look at all the sectors here, but you could see financials, big rally up, all the way to their 61.8 fib, where they're finding some resistance. Chart 47, XLK technology. Looks like I got the wrong chart here, but again, it's essentially like the Qs. It's basically, rallied off the lower trend line. It's back to this upper trend line. Next. Chart 48, here's the semiconductors, also rallying back, regaining that 200-day moving average, closing slightly above its 50-day. Chart 49, XOY, consumer discretionary, nice strong rally back. Chart 50, banks, again, got near the March lows, almost a double bottom, had a nice channel, nice move out of the channel, and above the 50-day moving average now. Chart 51, transports, nice move up over its 20-day moving average now. Again, it was quite oversold. It was below its lower Bollinger Bands, I think, let's see, 1, 2, 3, 4, 5 consecutive days in a row. It was very oversold, bouncing back. Chart 52, airlines. This is the JETS ETF, subcomponent of transports. As you know, I've been monitoring this steep downtrend channel. Mid last week, it was near the lower portion of this channel, but you had a nice little base forming. I said you could buy it inside the pattern. That triggered on Thursday morning. Hope you bought it. And then it gapped up on Friday. Very nice percentage move. Again, the rubber band was stretched on this one. It was ready to move. Chart 53, here's the 2-hour view. You can see the channel. You can see the nice little base here, little horizontal rectangle that it had inside the channel. That's where I bought. And then, of course, it gapped out of the pattern. There's a little open gap here. Again, hell of a percentage move there. Hope you guys caught that puppy. Chart 54, real estate. Nice move off that divergent low, as you can see, especially the pullback in rates. Chart 55, energy. Again, managed to bounce off its 200-day moving average twice over the last month. Nice rally on Thursday, pullback on Friday. Chart 56, retail. Again, nice bounce back. You had a bullish break in symmetry here on this move in early October. So essentially we had a double bottom then. Jumper 57, biotech. Again, this sector's been crazily weak. Head and shoulder pattern back here, bear flag here in August. But it too was very oversold, stretched, bouncing back. Some other things that started moving last week, emerging markets, especially with that pullback in the dollar. Emerging markets here, you have a little symmetry break, bullish symmetry break with respect to that recent high at 42. Jumper 59, BABA, Chinese stock. China is also trying to bounce here, so here's a couple of these stocks. Jumper 60, K-Web, another Chinese internet type thing. So these are a couple if you're maybe wanting to play some of the emerging market areas. All right, moving on to commodities. Jumper 61, DBC, again, essentially been chopping sideways since this last higher low pullback. Jumper 62, there's the bigger picture monthly view. Again, I think these are in a bull market. You can see how the moving average ribbon crossed here in basically early 2021. Had the first leg of that bull market, had a three-wave pullback over the last year. I think this eventually goes to new highs. Jumper 63, crude oil. Again, nice pullback last week, down almost 6%. Jumper 64, crude oil on the daily. So could be working on this wave C or something else here. We'll see where this develops, but either way, I favor that lower high. Or you could have sort of a slanted head and shoulder here with the neckline here. 200-day moving average is below is to monitor if we continue selling off. Jumper 65, copper. I've been showing this chart. This has been a big level, support level. We held that in October, rallying up and testing a little downtrend line here now. The RSI trend line break gave a nice confirmation long there. Jumper 66, DBA, agriculture, nice move, basically testing the highs. Jumper 67, there's the weekly view. Jumper 68, coffee, haven't shown this for a while, but just really showing it here. Again, I doubt any of you really trade coffee, but you can see this has been an important resistance support area, and you can see how we held that in August. Just perfect technical analysis there playing out. Next, let's look at Bitcoin, Jumper 69, Bitcoin. So Bitcoin, as you know, had that powerful move from mid-October up. We talked about it here. You can see the comments from a few weeks ago. We held the demand zone. We rallied off the support area. Again, now look at your moving average ribbon, guys. Remember I talked about it. Look how wide that puppy is. So is this an area where you want to go long Bitcoin now? No, this is an area where you need to see a consolidation. Jumper 70, here's MSTR, one of the Bitcoin names that I put out as a long idea last week. By the way, this is a 60-minute view. Had a nice tight coil, and it popped out of the coil. Was a way to play it. Next. Jumper 71, US dollar. Again, nice strong pullback on Friday, as you can see. We'll see where this goes. We sliced right through that 50-day moving average. Next. Let's move to precious metals. Jumper 72, gold. Gold up, on Friday, 0.3%. Still hanging on to the 9 EMA for now. Again, a good 200-point rally from that low, breaking through that downtrend line. Again, I would view a pullback as forming a higher low. Jumper 73, there's another daily chart of gold. Again, it shows this ABC three-wave. Remember, in uptrends, guys, it's ABCs essentially. Again, here added fibs. We're either going to take out this high or we pull back more. But otherwise, you can see the stocks. The stocks generally lead the metal. That's the GDX-GLE ratio. The stocks have been underperforming since the May highs. Short term, it's trying to curl up a bit. Jumper 74, gold on the weekly. Again, you have this basically triple top resistance here. We pulled back from that, as you know, early in the year. ABC pullback. Maybe if we get a pullback in here, whatever, again, I'm looking for a higher low, and then I'm looking for gold to take out the highs and make new all-time highs. Chart 75, here's gold on a monthly. This would be the bullish view where it's starting a wave 3 up to new all-time highs. If that's the pattern, this could go up to $3,000. Next. Chart 76, here's silver on the daily, still in this pattern. I don't have a monthly chart in here tonight, but otherwise this is just basically right in the middle of this pattern. Chart 77, GDX. So GDX had a powerful move out of the pattern, pulled back. I said to watch for support at the broken channel, which it found support essentially at near that 61 fib. To me, that was either wave B or 2, and we're either going to have a wave C or 3 move up. Now, which one is it, C or 3? It doesn't matter. They both call for another move up to take out those recent highs. So either way, you can make money on that, guys. You could put a swing stop right there at that higher low. Next, chart 78. Here's another daily chart. One way to view this could be an inverse head and shoulder. You can see the left shoulder, right shoulder, head, the neckline area, supply zone up here. Your moving average ribbon, you can see how it's pinching there on a bullish configuration. You can see it was too wide there at the lows. Gave you a clue of a rally. Chart 79, here's a 60-minute view. Remember, GDX filled that open gap last week. That was a good area to go long. And then it took out its channel line, the ratio. It took out that ratio trend line. Everything lined up. Little pulling back a little bit on Friday, not surprising. Chart 80, here's the BPGDM system. So this was overbought up there in April and May, gave a sell signal back there in late April. That was a good sell signal. Quick buy and sell signal there in July. This final buy signal in October was good, and then I said there was a level here to monitor, and that took that out last week. Chart 81, here's a cleaner chart. This is based on a Rinco. So again, we were in overbought territory there in April where we sold off from. We got the oversold territory where we've rallied from. Nice clean trigger on that parabolic SAR, as you can see. Yes, you had a little whipsaw there in July, but it quickly righted itself. You also had a MACD divergence there at the lows. Great chart here. Next, chart 82, GDXJ. Again, like I said, I view this as a wave 2 or B pullback, and we're going to go up in a wave 3 or C. Let's take a look at some individual names, guys. So chart 83, here's CDE. Again, similar pattern. Like I said, wave 1 or A, wave 2 or B. So I favor this breaking up and at least tagging that 200-day moving average. Chart 84, OR, another one that broke out of its channel that I showed a few weeks back, moving up nicely higher. Chart 85, GOL or GFI, little tight channel, breaking through that. You got a higher low here. This one looks pretty good. Chart 86, GOLD. First off, I gave this as a long idea back in early October off this doji with a trigger here and a stop at the low. Hell of a move all the way to the 200-day moving average. Then you had a buy opportunity on that pullback. Again, I think a stop could now be moved to this 1580 area. Chart 87, HL, Hecla Mining. It's a silver stock primarily. Potential little inverse head and shoulder setting up. Chart 88, MTA. Remember 2 weeks ago I said this looked like a low risk long off. It had pulled back, again, from the 13.5 area all the way to the 2s. This has been an important resistance support area. I took a shot going long there, and you can see prices attempting to bounce off this area. Chart 89, here's the daily. You can see a little basis forming on the daily. Big pickup in volume, especially on Friday. That seems to confirm that. If you're long, put a stop right at the low there. Chart 90, SVM, a little silver stock. Nice volume on Friday. I like this pattern that's forming. Look at that nice long trend line on the ratio as well. All right, guys, that does it for some setups here. Again, you don't need to play all of these. I'm just giving you some options. GDX, GDXJ, Nugget, or the ETFs that make it easy, but I showed you some of the individual names. And finally, let's follow up with some other recent trade ideas that we've had. Chart 91, XG, this is a long idea of mine from 2 weeks ago with a trigger over 125. Heck of a move. It tagged my target at the 200-day moving average here. Jarbor 92, GDHG. This was kind of a thin one, but this is a long idea of mine last Tuesday. Bull flag, and this sucker from the trigger here in the 13 hit 22 at one point. Hell of a percentage move. Hope some of you caught it. Jarbor 93, RRC. This was a long idea of mine last Tuesday as a breakout over this 35.80. Nice move. Take some profits. Jarbor 94, IDYA, another one from early last week, had a long trigger of 27.80. Took that out for a nice trade. Pulling back now from that recent high is not surprising. Jarbor 95, RPTX was a mean reversion. Again, you had a wide ribbon. Look how oversold it was. Down so many days in a row. MACD started curling up, so you had a long trigger here. And again, it hasn't been a big pop, but the percentage here is bigger than you think. Since, your trigger here around 350 did tag $4, so still percentage move pretty good. Jarbor 96, GRBK, another long idea of mine from last Monday. Nice trigger, and even if you bought, I said after that gap, that strong move, I said to look for momentum follow through, and you got it 2 days in a row. Jarbor 97, CRNX was a coil mine last week, triggered nicely on Friday. Jarbor 98, AJG was a breakout idea of mine last week. 237, 238 was your trigger. Nice break. Jarbor 99, IGMS was an oversold play. You had a little positive divergence, pick up in volume, and you could see it provided a nice trade over that trend line. And guys, the final chart number 100, AI. I know a lot of you use that. Was coiling last week, as I showed. It broke out of that nicely. All right, guys, that'll do it. We'll see what happens when futures open. I think futures are open potentially maybe just slightly down looking at, but we'll see. Again, I appreciate everyone's support on YouTube, and if you can leave a like and comment, that helps the algorithm, helps grow the channel. And again, everyone have a good rest of your Sunday afternoon. Take care.